Right, let's jump right in. Today we're going to be taking a deep dive into the world of finance.
Sounds good.
We'll be focusing on the fundamentals of auditing and financial statements.
Okay.
All those things that might seem a bit, well, maybe not the most exciting,
Right.
but they're actually super important for understanding how businesses work and really how to make smart decisions with your own money. So,
It's true. It's like learning the language of money, you
yeah,
know?
exactly.
And the cool thing is you've already got some notes and excerpts from a course called FYBAF at Mumbai University.
That's right. We're using your materials as a starting point.
Right.
But even if you're not a student, these concepts are really essential for anyone interested in business or investing,
Yeah. Yeah. Absolutely.
or even just trying to wrap your head around what's happening in the financial news these days.
Definitely.
It's everywhere you look. So,
I think a good way to put it is you wouldn't try to read a book without knowing the alphabet, right? Well, financial statements, they're like the ABCs of the business world.
yeah, that's a great analogy.
Yeah.
So let's start there
Okay.
with the definition of financial statements.
Sure.
We see from your notes there are four main types: the balance sheet, the income statement, the cash flow statement, and the statement of changes in equity.
Okay.
So big picture, what are we looking at here?
These are essentially different perspectives on a company's financial health, you know? So you have the balance sheet, and that's basically a snapshot in time.
Okay.
It shows what the company owns, its assets, and then what it owes, its liabilities.
Okay.
And then the difference between those two, that's the equity.
Okay, so balance sheet, a snapshot.
Yeah, like a financial selfie, you could say.
I like that.
Yeah.
So what about the income statement then?
That's more like a financial video.
Oh, okay.
It shows how much money the company brought in, its revenue, and then how much it spent, its expenses
Okay.
over a certain period of time.
Gotcha.
And the difference between those two, that's the company's profit or loss.
So if I want to see if a company's actually making money, the income statement is where I go.
You got it. That's the one.
Okay, now the cash flow statement. That one always seems a little bit mysterious to people.
It can be, yeah.
So break it down for us. What's that all about?
Sure. So the cash flow statement, it really gets into the nitty-gritty of, where the cash came from and where it went.
Okay.
And this is super important for understanding a company's short-term viability, let's say. Like, imagine you're running a small business and your income statement shows a profit,
Right.
but you don't have enough cash on hand to pay your bills.
Uh-oh.
Yeah, that's a problem, right?
Yeah.
The cash flow statement, it helps you avoid that situation.
So it's not just about profit, it's about cash flow.
Exactly.
That's a really important distinction, I think.
Yeah, for sure.
Okay, and what about that last one? The statement of changes in equity. Is that like a family tree of the company's ownership or something?
It's more about how that ownership structure has changed
Okay.
over a specific period. So, think stock issuances, dividend payments, that kind of thing.
So it's more dynamic. It shows how things are evolving.
Exactly.
Exactly.
Okay, so these four statements, they each tell a different part of the financial story, but why should we, the everyday folks, really care about all this? How does this actually affect us?
Well, let's say, for example, you're thinking about buying stock in, I don't know, Apple.
Okay. Yeah.
Before you do that, you probably want to know if their iPhone sales are actually growing, like everyone says, right?
I mean, yeah, that'd be good to know.
So you'd look at their income statement, to get the real story behind the headlines.
So these statements can actually help us, like, make informed decisions as investors?
Yes, absolutely.
Are there other ways they're used, though? Oh, yeah, all the time. Like, think about a bank deciding whether to loan money to a company.
Okay.
They'll definitely be, like, scrutinizing the balance sheet to see if that company has enough assets to cover its debts.
Makes sense.
Or let's say you're considering working for a company.
Yeah?
You might want to, take a peek at their financial statements.
Do a little research?
Yeah, just to see if they're financially stable,
Right. Are they going to be around for a while?
Exactly.
So it's not just for Wall Street analysts then.
No, not at all.
These statements can help us make smarter decisions as investors, employees,
Yeah.
and really even just as informed citizens trying to understand, the financial world around us.
Exactly. And speaking of ensuring accuracy and reliability, that's where auditing comes in.
Ah, yes, auditing.
Right.
You've given us some great definitions and explanations of that in your notes. So what really jumps out at you about the objectives of an audit? Is it all about, catching the crooks?
Well, it's definitely more than that.
Okay.
Auditing isn't just about, crunching numbers. It's
Yeah.
about really building trust and transparency in the financial system as a whole.
Hmm.
You can kind of think of an auditor as like an independent referee,
Okay.
making sure that the financial statements are playing by the rules, so to speak.
So it's like having an audit adds this layer of credibility to the financial statements,
Exactly.
like getting a seal of approval from an expert.
Right, right.
But and we see this in your notes, even with an audit, there are limitations,
It's
right?
true, yeah.
It's not a perfect system.
No system is perfect, right?
So talk to us about that.
Well, auditing, it provides what we call reasonable assurance, but not absolute certainty.
Okay.
It's kind of like when you go to the doctor for a checkup.
Right.
They can give you a clean bill of health based on their examination, but that doesn't mean you're invincible, right?
Right. Of course not.
Yeah. No, so there are always those unknowns.
And just like a doctor's visit, audits can be, well, they can be costly
Yeah,
and time consuming. So it's a bit of a trade-off, right?
yeah, for sure.
Between the benefits of that added assurance and then the resources that it requires.
Yeah, that's a good way to put it.
Now, your materials, they make a distinction between auditing and investigation.
Right.
And that seems important. So what's the difference there?
Well, an audit is it's a regularly scheduled checkup, we could say,
Okay.
of the company's financial statements, whereas an investigation, that's usually triggered by something specific.
It's like a red flag.
Right, like maybe a whistleblower alleging fraud, or perhaps, some unusual activity that just needs a closer look.
So an investigation is more like a targeted probe,
Yeah, that's a good way to think about it.
whereas an audit is more routine.
Right, more of a regular examination.
Okay, that makes sense. Now, your notes also get into this tricky topic of errors and fraud.
Right.
So let's start with errors. What are we talking about there?
Sure. So even with the best intentions, mistakes happen.
Of course, we're all human.
Exactly. Nobody's perfect.
And in accounting, we talk about errors of omission and errors of commission.
Okay, so those are like the two main categories.
Like, yeah, we could say that.
All right, so give us an example. What's an error of omission?
Sure. So an error of omission would be, let's say, forgetting to enter a big expense into the books.
Oh, okay, so something's completely left out.
Yeah, it's missing, it's omitted.
Oh,
Oops, exactly.
okay. And then what about an error of commission?
So an error of commission would be, let's say you recorded that expense, but you put it in the wrong category.
Oh, okay.
So it's there, but it's messing up, your overall financial picture.
Okay, so those are errors. Those can happen, accidentally.
Yeah, unintentionally. But fraud is intentional.
That's right, yeah.
That's like cooking the books to make the company look more profitable than it actually is.
Yeah, deliberate deception. That's what we're talking about with fraud.
And auditors, they play a key role in detecting and preventing that.
Absolutely, yeah.
Which is, that's a huge responsibility.
It is. It's why their work is so important for protecting investors and the integrity of the markets in general.
Now, speaking of making things look a little too good, there are two terms that really caught my eye in your notes. Window dressing and secret reserves.
Okay.
They sound a bit shady, to be honest.
Yeah, I can see why you'd say that.
Like something out of a spy movie?
A little bit, yeah.
So what are those all about?
Okay, so window dressing, it's all about manipulating the financial statements, but doing it in a way to make the company look more attractive to investors or lenders.
So it's like putting on a fancy suit for a job interview,
Yeah.
even if your skills don't quite match up.
Right, it's about creating that illusion of success.
Okay, interesting. And what about secret reserves? Is that like stashing cash into the mattress, but on a corporate scale?
Well, it's more like tucking away funds in obscure accounts, or
Right.
or maybe undervaluing assets to create a hidden cushion, so to speak.
So they're trying to like smooth things over, make things look a little better than they actually are?
Yeah, it's about managing perceptions, we could say.
Okay, so it's not always reflecting the true financial health of the company.
Right, and that's why ethical accounting practices are so crucial. Investors, creditors, and the public, they need to have faith that the numbers they're seeing are a true reflection of the company's financial reality.
That makes sense. But with all this potential for for manipulation,
Yeah.
how can we be sure that auditors themselves are playing by the rules? I mean, who audits the auditors?
That's a great question, and a perfect place to pause for now and pick up in our next deep dive.
Sounds good. Looking forward to it.
Me too.
That's the question, isn't it? Who watches the watchmen? I mean, if auditors are supposed to be these guardians of, financial truth,
Right.
who's making sure that they're not, cutting corners
Right.
or playing favorites?
It's a really important question, and luckily there are multiple layers of oversight in place.
Okay.
So first off, auditing firms, they have their own internal quality control procedures.
Right.
You can kind of think of it like peer review, but for numbers.
So it's not just one lone wolf accountant making all these big judgments.
No, not at all. There's definitely a system of checks and balances within the firm itself.
Okay, that makes sense.
But it goes beyond that too.
Okay.
You also have external regulatory bodies that play a really vital role.
So like for publicly traded companies, there's...
Yeah, exactly. So for publicly traded companies, you've got organizations like the PCAOB here in the U.S., and they set standards, they conduct inspections, and they can even, penalize firms that aren't meeting the mark.
So there's someone looking over their shoulder, making sure everything is above board.
Yeah, you could say that.
What about those professional organizations for accountants like the AICPA and whatnot?
Yeah.
Do they have a role to play in all this as well?
Absolutely, yeah. So groups like the AICPA, they have these codes of ethics that their members have to adhere to.
Okay.
And these codes, they really emphasize things like independence,
Okay.
objectivity, integrity. They provide a framework for ethical decision making.
So we've got those internal checks,
Right.
we've got the external oversight, and then this strong ethical foundation that's pretty robust, but I'm sure it's not, it can't be foolproof, right? We're talking about humans here.
Yeah, you're right. No system is perfect, and that's why it's so important for investors and the public to really be aware of, potential conflicts of interest.
Very cool.
And to always, scrutinize those financial statements carefully.
Yeah, don't just blindly trust the number.
Exactly. Think critically about the information you're being given.
Trust but verify.
Yes, good advice. Good advice in general.
All right, so let's dig into the nitty-gritty now of what an auditor's job actually looks like.
Okay.
Our notes, they highlight examination, evaluation, and reporting as some of the key tasks.
Right.
What does that look like in practice?
It's a multifaceted role,
Yes.
The auditor, they gather evidence.
Okay.
They pore over financial records to assess accuracy,
Got it.
completeness, and then they communicate their findings in a detailed report.
So it's not just about being a math whiz. They need strong analytical skills, communication skills.
Oh, for sure.
It's almost like detective work, piecing together this financial puzzle.
That's a great analogy. Yeah, and their report, it's not just a list of figures.
Right.
It's actually an opinion on the fairness and the accuracy of the financial statements, and that carries a lot of weight for investors, creditors, and really anyone else using those statements to make decisions.
So they're putting their professional stamp of approval or disapproval, I guess, on the company's financial picture.
Exactly, and that opinion isn't formed lightly. They have to, plan their work very meticulously.
Okay.
Determine the appropriate level of scrutiny and document everything very thoroughly. So
No cutting corners allowed.
no, it's a rigorous process aimed at ensuring the reliability of their findings.
So it sounds like a demanding job.
It is.
Requiring a pretty unique mix of skills and a real commitment to accuracy.
Yeah, absolutely. And let's not forget the importance of skepticism.
Right.
A good auditor, they approach their work with a healthy dose of what we call professional skepticism.
Okay.
Questioning assumptions, digging deeper to uncover potential issues. It's not about assuming everyone is trying to deceive.
Right.
It's also not about taking everything at face value.
Right. It's about finding that balance.
Exactly.
It's like that saying, measure twice, cut once, but applied to finance.
Yes. Very good. Very good.
Now, speaking of principles, our notes really emphasize the importance of independence and integrity for auditors.
Okay.
So what do those terms actually mean in this context?
So imagine you're a judge at a baking competition.
Right.
And your best friend is one of the contestants.
Okay.
Could you really be completely impartial?
Probably not.
Probably not, right? You'd probably subconsciously want them to win,
Yeah.
even if their cake was a total flop.
Yeah, of course.
So auditor independence, it's all about avoiding those kinds of conflicts of interest.
Got it.
They need to be free from any relationships or influences that could compromise their objectivity.
So,
Able to make judgments based solely on the evidence in front of them.
so no auditing your best friend's company.
Right.
No accepting fancy gifts from clients. No letting personal biases cloud your professional judgment.
Right. It's about, having that clear separation.
Okay, and integrity goes hand in hand with that,
Oh,
right?
absolutely. Yeah. So integrity it's about upholding those ethical principles, being honest and transparent in your work,
Okay.
and having the courage to stand up for what's right, even when it's tough.
So it's about, doing the right thing even when nobody's watching.
Yes, exactly.
It sounds like auditors have a huge responsibility then, not just to their clients, but to the entire financial system.
Right. They play a vital role in ensuring fairness,
Okay.
transparency, accountability, which ultimately, benefits everyone who participates in the markets.
This has been a fascinating dive into the world of auditing.
Yeah.
And I feel like we've only just scratched the surface.
There's always more to learn.
We've covered a lot of ground, but there's one big piece of the puzzle that we haven't really discussed yet, and that's technology.
Ah, yes, the digital age.
It's transforming everything.
It is, and auditing is no exception.
So buckle up. We're about to explore how technology is really revolutionizing the auditing profession, and what that means for the future of financial reporting.
Sounds good.
So we've talked about, the meticulous work that auditors do. They're like these financial detectives, making sure everything's on the up and up.
Right.
But I'm really curious about, how technology is changing things in this field.
Yeah.
I mean, it's not all green visors and adding machines anymore, is it?
No, definitely not.
So what's changed?
Well, think about it. We've gone from, mountains of paperwork to like oceans of digital data.
Right.
That's a huge shift.
Yeah, that's a game changer.
It really is. It changes how audits are conducted.
So less time with calculators, more time with algorithms.
Exactly. Auditors are using, all sorts of powerful tools these days.
Okay.
Things like artificial intelligence, machine learning.
Wow.
To sift through those massive data sets, spot anomalies, assess risk in ways that just weren't possible before.
So they can analyze like millions of transactions
Yeah.
in the blink of an eye.
Basically, yeah, it's pretty incredible.
But, I mean, can a computer really replace human judgment?
That's a good question.
There's got to still be a need for experienced auditors to, make sense of all this data.
Oh, absolutely. Technology is a powerful tool, but it's not a replacement for human expertise.
Okay.
It's more about collaboration, I would say.
So humans and machines working together.
Exactly. Technology can handle those, repetitive, time-consuming tasks.
Right.
And that frees up auditors to focus on the big picture.
Okay.
Interpret the findings, and really apply their professional judgment.
So it's not humans versus machines. It's humans with machines.
Yeah, working smarter, not harder.
I like that. But with all this automation, are there any downsides, any risks that we should be aware of?
Yeah, that's a critical question.
Yeah.
I think one big concern is cybersecurity.
Okay, right.
With so much, sensitive financial information stored digitally, the risk of data breaches is a major issue.
Yeah, that makes sense.
Auditors need to be incredibly vigilant about, protecting the data they're working with.
Right, because a hacked audit is about as useful as a screen door on a submarine.
Yeah, that's a good way to put it.
What other challenges are there?
Well, I think the rapid pace of technological change means that auditors need to constantly, adapt and learn new skills.
It's always evolving.
Always evolving, yeah. Think blockchain technology, for example.
Like,
it has the potential to really revolutionize how we audit transactions, how we track assets.
wow.
But auditors need to understand how it works, to really leverage its power.
So it's not just about mastering one software program. It's about having this mindset of continuous learning.
Exactly. That's a great way to put it.
Okay, so what advice would you give someone who's, interested in a career in auditing, knowing how quickly things are evolving?
I would say, first and foremost, build a rock-solid foundation in accounting and auditing principles.
Oh,
Those
no.
core concepts, they'll always be relevant.
Okay.
But pair that with a genuine enthusiasm for technology, and
Yep.
and a willingness to keep learning, to keep adapting throughout your career.
Keep those skills sharp.
Exactly, and never underestimate the importance of those human skills.
Right.
Communication, critical thinking, problem solving. Those are the skills that really set us apart from the machines.
Right. At the end of the day, we're all human.
We are.
So it sounds like the future of auditing is all about, embracing the power of technology,
Yeah.
but also, recognizing the irreplaceable value of human expertise.
I think that's a great way to sum it up.
Well, there you have it. We've journeyed from the basics of financial statements and audits all the way to, the cutting edge of technology's impact on the field.
It's been quite a journey.
It has. I hope you're feeling a bit more financially savvy.
Yeah.
And maybe even, inspired to learn more.
Yeah, I hope so.
I mean, financial literacy is power, right?
Absolutely.
The more you understand the language of money, the better equipped you'll be to navigate this complex world of finance.
For sure.
Whether you're an investor, a business owner, or just an informed citizen, really.
Couldn't agree more.
So keep learning, stay curious, and as always, thanks for taking this deep dive with us.
Thanks for having me.